All right, I was asked to record a series of videos on how I would start a trading career if I had to restart it today. Now, that was a good question because the videos I post, I've been in the industry 17 years, and the videos I started posting a few months ago are all the trades that I've been doing for my prop firm and to make a living. And those may be way above the level that anybody should be who are watching my videos. So here's how I would start today trading in a trading career. So first thing, you want to make sure your account is set up correctly. That is the number one thing I would do. Otherwise, you won't be able to trade in it. So here's my E-Trade account, personal account preferences, and you want to go down to additional trading features. Now, most brokerage firms will have this section if it's a quality brokerage firm. So first thing I want to do is margin trading. That I have to have margin. My personal account has traditional margin, and my business prop firm has a portfolio margin. Now the difference doesn't matter. What you want is you want the features of margin. One is your trades clear quicker. I could trade in and out of positions using the same cash without waiting for the cash to settle. Normally, when you make a trade, you have to wait 3 days to use that cash again, not in a margin account. Another thing a margin allows you to do is allows you to get higher options trading levels. They require margin. Margin, people understand as borrowing against a brokerage firm. That's not really the correct classification of margin. You can borrow, but that's not why I use it. The way I use it is one for that clearing quicker, cash clearing quicker, and also the margin requirements are for holding stock are lower. So for $1,000 worth of stock, I may only have to have $500 on hand, and that is based off of the stock in a traditional margin account. So if it's a high quality stock, the margin requirement is going to be lower. So here's the next thing to do. You want to apply for margin. Second thing you want to do is I would go to equity trading, get a nice level. So let's look at the different levels. So here I would make sure that my investment objective is either growth or speculation. Otherwise, they may not approve you for the higher levels. Second, level one is what's called covered position. So this is covered call. So stocks that you already have, you could sell a covered call against. And I'll go through what that is. But this is just level one. Buy rights is you buy the stock and sell a covered call simultaneously. So if you want Apple stock or you want to sell a covered call on Apple stock, but you don't own the stock, you could do it at the same time, buy the stock and sell the covered call at the same time. Okay, we'll get into what these strategies are. Level two, you can buy calls, buy puts. You can do some of the fancier thing like callers and straddles. I typically don't use those, but I have used them in the past. But the reason you want level two is for this cash secured puts down here. Okay. You also may want some of these if you make a mistake and you have to do some risk mitigation, then you can use some of these for risk mitigation if you make a mistake. Okay. Level three, you don't really need in the strategy I use. The reason I get to level three is because I trade SPX spreads sometimes, and I need that. I need level three to do SPX spreads, and I have a video on SPX spreads. Also, you can do naked puts. Is you could sell a put without putting up the money for it. I really don't want to do that. Level four, all you get is naked calls. Naked calls is the most aggressive and most risky strategy. I do have a naked call video out there, and I don't have level four in this account because it's my personal account. I do have it in my portfolio margin account, and the only reason I don't have it in my personal account is because I do trades really quick, And when I'm doing lots of covered calls, sometimes I don't have the shares for the covered calls. And I want in my personal account, I want it to reject that trade. If I don't have the shares, I don't want to sell the covered call in my personal account. But for the business, I do, because that the business has enough cash and it has enough portfolio margin and to quickly get out of that, or to actually make it profitable. I accidentally sold 3 naked calls, and they were hugely profitable. But I don't make it part of my repertoire. So this is level one, setting up your account if I had to be a day trader today.